One, two, three. So a question everyone is asking right now is now the time to sell TQQQ. For those that are not familiar with TQQQ, it's a triple leverage ETF. It follows the overall NASDAQ index. So when the NASDAQ index, meaning the NASDAQ market, goes up 1%, TQQQ does 3 times that. So it goes up 3%. Same thing when it goes down, right? If the NASDAQ goes down 1%, this thing goes down 3%. So it's a little bit riskier, but again, it's very, very bullish, very, very consistent. And I love buying the dip on TQQQ, just like I announced to all of our Learn Plan Profit members when it pulled back. And while everyone was freaking out, our team bought the dip. We stepped on the gas, meaning that we really added more to our position size when it began to trade above the EMA line, and then we locked in profit as it became overbought. So now, right, so asking the question, is now the time to lock in profits? One of the things that you have to understand is, at least in my experience, I can only speak from that, there's no such thing as a perfect entry and a perfect exit. You guys could see that a lot of you guys have been asking me to continue this little notes section. It makes it a little bit easier for you to follow through with it. So I like to understand oversold, meaning cheap levels, and overbought, pricey levels, where it makes sense to buy, where we step on the gas, right, when we break above EMA, and then when it becomes overbought enough, look at the RSI, look at the MACD, look at previous highs, where it makes sense to lock in profits. By me locking in profits, let me make this very clear. It's not that TQQQ has to pull back. TQQQ can continue to uptrend. It could break above 180, although I have that as my resistance level. Again, patterns tend to repeat themselves. They don't always have to. I locked in profits to be safe. It's as simple as that. If it goes up, I can day trade it if I want to, but I no longer want to swing trade it. A question you might have: why wouldn't you want to swing trade something if it continues to go up? Because it's no longer a good deal. So holding it overnight is viewed to be too risky, meaning that if I want to day trade it, that's great. I can manage my risk intraday. But when it comes down to swing trading it, it just really wouldn't make sense at these overbought levels. All I'm doing now is I'm preparing for it to pull on back. If we get the break below, and it's a little bit easier to see on the 1 hour time frame. You guys could see that we can see the oversold levels when we broke above EMA, made higher highs, higher lows. Now we're overbought at a resistance level, and now I'm waiting to see lower highs and lower lows below the EMA line on the 1 hour time frame. This is something that we've been exclusively talking about within our Learn Plan Profit live trading sessions every single morning. It's the importance of understanding when to buy, when to add more to your position size because it's in your favor, and then when to lock in profits and not being afraid to do so. Who cares if it continues to go up? At least I don't care enough to overthink it that way. Just as much as it could go up, it could go down, and it's so much more important to me to manage my risk than it is to think about the couple extra dollars I can make if it goes up a little bit more. There's more downside risk than there is upside potential, which is the easiest way that I can make sense of how and why I lock in profits. It's all about opportunity cost. When something becomes overbought, it's not just about how much more you can make, but as well as what the potential downside is and the risk that comes at. And this is only a decision that you can make. If TQQQ, meaning the NASDAQ market, if it begins to trade below the 1 hour EMA, again, I'm not saying that it will, I'm not saying that it has to anytime soon. I'm just saying that it's overbought enough that it wouldn't be a surprise if it does. If it does begin to pull on back, then this is when we can begin to consider, not now, but consider jumping into SQQQ, which is the inverse ETF. This goes up when the NASDAQ market goes down. This is a very, very risky ETF. It's also triple leveraged, but because the NASDAQ market is so bullish, this is riskier because, again, the direction's normally not in your favor for a long period of time on SQQQ. So if you are not good, if you suck at risk management, and if you suck at bag holding, don't touch this ETF. It's as simple as that. I don't like to sugarcoat things, especially not with that. I'm trying to look out for you. But if you're someone that's good at identifying price action, direction, and then you wait for proper confirmation, then this might be something that you might want to look into, because if we do begin to make higher highs and higher lows and we approach previous lows on the NASDAQ market, previous highs on SQQQ is a little bit over 20% ROI if it makes a full-on recovery, which simply means that all we would literally need is TQQQ to go to the same lows that it was at before, and that would bring SQQQ back to previous highs. Again, understanding overbought, oversold levels, and what goes up when the market goes down. That is the beauty behind trading in the stock market, knowing what to trade and knowing when to buy, when to lock in profits, and then when to wait for the next opportunity to present itself. If you're not going to be touching SQQQ, as if you're a beginner, I wouldn't encourage it for you. I would simply approach this in a very conservative way. I would have enough money left over that if the stock market does pull back, you're able to load up on the good deals that you see when the market is oversold. That is the beauty behind preparing. It's not about trying to predict the future, but simply taking steps now in effort to prepare for it. So when the market does pull back, you're not devastated. You're not like someone that's just sitting on your hands hoping for the market to recover. When the market pulls back, the only people that freak out are the people that did not prepare. Because if you think about it, when the market pulls back, that's when deals present themselves, and that's the time that we want to buy so we make money when it recovers. You either prepare or you get scared when it does end up pulling on back. So let me know what you guys think about that. Again, if you guys want to join us for my live trading session as soon as tomorrow at market open, again, we're running one of our biggest sales ever, really, for Learn Plan Profit 2.0. You get lifetime access, you get to watch me trade live every single day, and you also get access to our 24/7 private Learn Plan Profit Discord group. Please make sure to message me down below if you guys have any questions whatsoever. Please consider dropping a thumbs up, consider subscribing if you feel like we earned it, and like always, let's make sure that we end the year on a green note. Take it easy, team.